Hello, everyone. Welcome to Cangem Global's introductory session for export-import in shipping business. You will learn the basics of trading, brokering, shipping, in other words, exporting and importing. Let me give you a brief introduction of Cangem Global. Kenjum is a privately held multinational corporation active in international trade, working as an exporter, importer, shipper, and we are also into trade consulting. Without further ado, let's start with our session. As you can see on the screen, we will start with the basic terminology first. So let's get acquainted with export, import, shipping business. Let's start here. I believe you can see my cursor. So who is a trader? Who is a trader versus who is a broker or a facilitator intermediary? Let me give you an example. Let's say a trader. Trader is somebody who buys and sells. Example would be a car dealership. Now, car dealerships, they buy cars and they sell cars, right? So if you go into any car dealership, you want to buy a car, they will be able to sell a car. They do not tell you who they bought it from. They will only tell you about the features of the car, and this is the car, and they will let you drive the car. And if you like the price, you can buy it from them. So the seller becomes the car dealership, right? So in this case, that car dealership first became the buyer. They bought the car from somebody, and then they sold the car. In other way, a trader is somebody who buys and sells. So trader is an entity who buys and sells, right? We're going to become a trader. Broker or facilitator or intermediary. A broker is an entity who never buys, never sells. Example, think about a realtor. Think about a real estate agent. So what they do is they do not buy anything, they do not sell anything, they just work as an intermediary. They just facilitate the whole deal. So let's say you want to buy a house and you have hired a broker, you have hired a realtor. You will go to that realtor, you will sign some documents, and the realtor will take you to different houses. When you like the house, when you want to buy the house, you will buy the house directly from the seller of the house, not from the realtor. So realtor is an entity who never buys, never sells, right? So the third thing that we see here is consignee, and then fourth is shipper, notified party. All these three things are interrelated. So if I were to explain shipper first, let's say shipper. Have you ever ordered something online from Amazon, from eBay, and maybe you have checked the packaging. In the packaging, it says consignee, or then it says consigner or shipper. So shipper is somebody who has shipped. Very, very simple. Shipper is somebody who has shipped. Now, shipper is an exporter. An exporter is an entity who ships the goods out of that particular country. So difference between a shipper and an exporter is shipper could be like a local entity as well. For example, somebody shipping from Edmonton to Toronto, that they become a shipper, right? But an exporter is somebody who is in Edmonton, but they sell and then they ship the goods to Tianjin in China, right? So they become an exporter. So that's the difference between an exporter and a shipper. Now, a consignee. A consignee is a receiver of the goods. Okay. Now, there is a difference between importer. As you can see, number 9 is importer. Consignee and importers are two different entities. Most people confuse them with one. So consignee is a receiver. Consignee could be a person who never imports. Example, let's say you bought something from Amazon, or you bought something from eBay. It got shipped from US or China or any other country outside of Canada. And then when you bought, you received the goods at your doorstep. You did not pay the import duties and taxes on it. You did not actually deal with a custom brokerage. You did not pay anything to the government of Canada. So you receive the goods at your doorstep. And when you do that, you become a consignee. But an importer, on the other hand, is an entity who actually buys and then custom clears the goods at their, I'm going to use a technical word now, port of discharge, right? We'll come back to this port of discharge later on. But importer is a company that pays import duties and taxes and custom duties and works with the government of that particular country where they're importing, and then pay all these duties and taxes to them. They also deal with customs broker. Now, coming to fifth, notified party. Point number 5, notified party. So notified party, as the name suggests, is a party that will be notified when the goods arrive at the destination port, right? So most of the times, this notified party is actually the consignee, right? Other cases, this notified party could be a third party hired by the consignee to custom clear their goods, to import the goods on behalf of the consignee. So the notified party could be the importer, or the consignee could be the importer in this case, right? Freight forwarder. Now, freight forwarder is an entity who arranges the freight, whether it is ocean freight or it is local transportation or it is air freight, like international freight. It could be air freight, it could be rail, it could be road, it could be ocean, it could be in containers, it could be in vessels. So freight forwarder is an entity who arranges the freight from the shipping company. Now, the shipping company is the company that owns the vessels, the steamship line, the SSL, or sometimes we just call it line. In our business, we just call it line. So if somebody's asking you, what is a line? You immediately know, oh, they're asking about the shipping line. They're asking about the steamship line. So examples of steamship line, you definitely must have heard or even seen on the road containers marked Costco, MSC, Maersk, Hapag-Lloyd, Kenjum, APL. All these companies are actually steamship lines. They own vessels, they own containers, sometimes they lease vessels and they lease containers, but they operate these vessels and they operate these containers, right? So steamship line is a company, is an entity that owns vessels, and then they own containers, or they operate containers and operate vessels. So freight forwarder is an entity that works with steamship line and then works with the shipper to arrange the freight. Mistake number 1, what people do is people directly call the steamship line. If they want to export one container, they will directly call MSC, they will search Google and they will call MSC, they will call Maersk, Hapag-Lloyd, Kenjum, APL, OOCL, all these companies, and then do not receive a proper reply. They do not receive any answer from them. So that is because they are making a mistake. You cannot call steamship lines and expect them to reply for 1 container or 2 containers or 3 containers, because they only deal in bulk. Unless and until you have 50 containers, do not bother calling them. So you are better off calling freight forwarders. Freight forwarders in this industry are your best friends. And I will explain that further later down the line. Why is that so? Right? Now we have already covered exporter, we have already covered importer, and we have covered customs broker. So let's go to the second half, like here. What is a POL, POD? POL is port of loading. Port of loading is the port nearest to the place of your loading. For example, let's take this example. You have a supplier in Canada, right? You are here, you are a trader in Canada, and you have a supplier in Canada. This supplier in Canada is going to be your seller, right? Now, if I were to let's do it this way. I'm gonna divide the whole thing into 2 parts, all right? And if I tell you that, so draw freehand, if I tell you on this half, this trader becomes the buyer, and on this half, this trader becomes a seller. So seller, buyer, deal number 1. Seller, buyer, deal number 2. In deal number 1, the seller is selling to this buyer, and the buyer has to decide where they want to buy. They can buy here, they can buy at the port of loading. Now, port of loading is what I wanted to explain it to you. So port of loading, this thing is the port. For example, if this supplier is in Vancouver, so the port of Vancouver will be port of loading. If this supplier is in, India, the port of loading could be Mundra or Kandla or Nhava Sheva or any other port, right? And if this seller is, for example, in Germany, this port of loading could be Bremenhaven or Hamburg. If the seller is in Nigeria, this could be Tin Can. If the seller is in, let's say, Ghana, this could be Tima in Ghana, right? So you got the idea. But for example, this seller is in Toronto. Now, we do not have a seaport in Toronto. We have a port, which is airport, which we can still use instead of like, if this is not the ocean trade, if this is, we are doing air freight, then yes, we will use the airport as a port of loading. But I'm taking an example. In majority of the cases, the kind of business that you are going to do will be done through ocean freight, right? So the port of loading nearest to Toronto will either be New York. For example, if you take Maersk, it'll go to New York. CM and CGM probably will go to Halifax, and MSC will go to Montreal. So the nearest port will be Montreal. The nearest port could be Halifax, or it could be New York, right? But we have not discussed about the terminals yet. So because this Toronto is too far away from Halifax, so there is normally sometimes around, let's say, somewhere around here, right? There will be a container terminal, right? So you will ship it to the terminal, like here. From here to the port of loading, it is normally done by rail, right? So sometimes we use terminals, sometimes we use port of loading. It all depends. It all depends upon your container booking. It all depends upon your distance from the loading place, the warehouse of the seller, right? So it depends upon a lot of things. So let's go back. All right. So let's go back. We are here. What is a port of loading? Now you have a little bit understanding of what is a port of loading. Now, what is a port of discharge? Similarly, there is a port of discharge. All right, so port of discharge is in the other country. The port of discharge in this case is in Vietnam, right? The port of loading is in Canada. And now container terminal is what I already explained to you. And then what is the container booking? What is when somebody will email you, they will write it as CNTR BKG. So there are a lot of short forms in this industry. There are a lot of keywords in this industry, the industry talk, industry language, as we can say it. Container terminal. So container booking. Container booking is actually a piece of a document which gives you a schedule when to get the containers from this port of loading or from the terminal, when to load the containers, and when you can deliver the containers back to the terminal or the port of loading, and when the vessel is going to sail from the port of loading to the port of discharge. So that booking is actually like a schedule for you, right? Then you have to work as per this schedule. There are going to be 5 dates. Those 5 dates are very, very important. You schedule your whole thing, your loading, your packaging, your everything according to those 5 dates, right? So what is now an export declaration? Export declaration is a method of declaring, telling the government of the country of export. So this is the country of export here, Canada. So it would be, if we are exporting from Canada to Vietnam, we will have to tell the country, we will have to tell Canada, in this case, CBS, the Canada Border Service Agency, what are we going to export? What are we actually exporting? What is the name of the commodity? What is the quantity? What is the price? What is a port of loading? What is a port of discharge? Who is the shipper? Who is the consignee? Who is a notified party? All of that. We will have to explain it to the government of the country of export. What actually are we exporting? So that piece of document is, in Canada, it is known as B13. In US, it is known as AES. Different countries, different names. It is called export declaration. In all the countries, that is there, right? Sometimes there are export duties. Sometimes there are no export duties. In many countries, there are export duties on some of the products, and some of the products there are no export duties. There could be even a negative export duty, meaning like there could be a subsidy, which if you export, you get money back from the government. Now, in Canada, we do not have any export duties or taxes. We do not even have local taxes. For example, if you are selling something from Toronto, which is in Ontario, normally if we sell from Toronto to any other part in Ontario, we will have to charge 13% HST, right? But if we export, there is 0 HST. We do not, and it is both for products and services, right? So if this company, the buyer, who you are exporting to, if they do not have a company in Canada or any subsidiary in Canada, then we will not charge them 13% HST if we are sending from Ontario, right? So what is a bill of lading? Bill of lading is actually a piece of a document. Well, sometimes we'll call it way bill. Sometimes when we use air shipments like air freight, we normally call it an airway bill. But when we do ocean freight, we normally call it a copy BL or BL and OBL. OBL stands for original bill of lading. Copy BL stands for copy of the bill of lading. Bill of lading is a piece of document when you actually export from here, when the containers go from as per the booking now, right? Because all these documents are kind of interrelated, right? And all these documents are interdependent on each other. So bill of lading will be issued here at the port of loading. And bill of lading can be issued by the freight forwarder. If it is issued by the freight forwarder, it'll be called in-house BL. If it is issued by the steamship line, remember steamship line? OOCL, Hapag-Lloyd, Kenjum, MSC, Maersk, like these. So if the bill of lading is issued by the steamship line, it'll be called line BL. So it will be called line BL. So line BL because of it steamship line. So we do not call it SSL BL or steamship line BL. We just call it line BL, right? So now you have an understanding. And sorry, why is it important? Why the bill of lading is important? The bill of lading is a proof that you have exported the containers or the shipment from this port of loading going towards port of discharge, consignee being the buyer. So the buyer gets an idea, buyer gets like in written, the buyer sees this, that, okay, you know what, this trader has exported the goods, the cargo. Now I'm using another word, cargo. Cargo is something that is inside the containers, very simple. Containers are like, we call it like the whole thing as shipment. Cargo is something that is inside of the containers or inside of that vessel. Right, if when the cargo is exported, when the containers are exported, the bill of lading is issued here at port of loading, and this bill of lading is a very important document for this buyer, right? Not for this company, not for this company. This is a very important document for this buyer. Without this document, they won't be able to import. This is one of the documents that they need to have when they prepare for bill of entry. Bill of entry, another terminology. I'm going very, very layman because I'm not actually giving you the whole information. I'm not, so that I don't want to confuse you. Bill of entry is a piece of, like, it's not one document, it's like a lot of documents put together, and then they have to show it to their government, so the government of Vietnam in this case, to prepare for the importation of that particular shipment, right? So as you can see, there is a truck here. So from supplier to port of loading, it'll be why local transportation is that's why there's a truck here. So from port of loading to port of discharge, it'll be by a vessel, so container shipment, container vessel, right? Container ship. And let's say there is a scenario now. If let's take a break here. First of all, A, who can be an exporter, B, who should be an exporter. This is something you might be able to see here, but you will be able to understand when you understand the bill of lading properly. All right, just for your curiosity, who can be exporter? Supplier in Canada can be an exporter in this scenario. Trader in Canada can be an exporter in this scenario. Buyer in Vietnam also can be an exporter in this scenario. So all three parties, all three entities can be an exporter in this scenario. For you to completely understand this, you need to have an understanding of the bill of lading, how the bill of lading works, and the bill of lading actually will tell you how the process of exporting works, right? So who should be the exporter? Now, this is a question that is extremely important. And that question will be solved when you actually know how to buy and how to sell, right? So how to buy from this seller, how to sell to this Vietnam. I'm talking about something like this. I'm talking about Incoterms here. So Incoterms are terms of buying and selling. This is a chart of responsibility. Like, for example, if we are talking about X Works, who will be doing export packaging, who will be doing loading onto carriage, who will be doing delivery to the port or destination, who will be doing. Now, this Incoterms 2010, 2020 have also been rolled out. These are given to us by ICC, International Chambers of Commerce. there is a difference how ICC gives us Incoterms and how people utilize these Incoterms. The business around the world is not done by documents. The business around the world, any business, for like you can talk about shipping business or export, import, or any business, is actually done sometimes in an incorrect way. And when 90% of those people are doing it in an incorrect ways, that incorrect way becomes the norm of doing the business. So I hope you understand some of the changes we have made it to kind of like fit into the norm. Although some of things people use, like for example, if we talk about FOB and FCA, people use it incorrectly. We'll talk about that later on. We will talk about that shortly. So let's talk about that. Now, going back, there is a scenario where there is a buyer in India who has an NRBN. NRBN stands for non-resident business number, meaning they have a company registered in Canada. So this buyer has a company registered in Canada, right? So this buyer tells this trader, not this, if you've not figured out on your own, this trader is you, and this trader is you, right? This trader, which is you, this buyer approaches you, or you approach the buyer, and the buyer says, you know what, I want to buy from you ABC commodity, whatever commodity, and but we will be doing our own ocean freight. This ocean freight, they want to do it because somebody who does this ocean freight will take care of the bill of lading. Again, like you will understand this properly when you understand the bill of lading. For you to understand the bill of lading, I normally will take around about 45 minutes to explain what a bill of lading is. Now, a buyer in India with an NRBN is actually telling the trader in Canada that we will export, we will do this ocean freight from POL to POD. We will take care of the bill of lading. We will take care of the container booking. And when such kind of a scenario arises, your buyer becomes both importer and exporter, right? So when your buyer becomes exporter, you don't want to sell here, right? If you sell here, the buyer will know the supplier, and then they will go together, they will kick you out probably, right? So you don't want to sell here, and you won't be able to sell here. You won't be able to do ocean freight. So if you are not doing ocean freight, your buyer is doing ocean freight, the only chance for you to sell is here. So see, if there are 4 places where you can sell. Number 1, number 2, number 3, number 4. And depending upon all these 4 places, 1, 2, 3, there could be terminals as well. So let's say 1, the second is the terminal here, and the third, the 4th is a terminal, and then the terminal at the port of discharge, and then the buyer's warehouse. So there are, like, let's say 6 places where you can sell. Dependent on how you sell, how you buy, these 6 places will actually dictate the Incoterms. The Incoterms will tell, if you understand the Incoterms properly, you will know if you are buying X works, or you're buying FCA, you're buying FOB, you're buying CFR in some cases, in some cases. But in any case, you never sell X works, so you never sell here. If you sell here, if your buyer says, "Can you sell X works?" and you said, "Oh yeah, I can sell X works." When you sell here, your buyer will know the supplier. And in this case, or in this case also, if you buy at this place, if you buy at POD, port of discharge, again, the buyer will meet the supplier. The supplier and the buyer, they will both know each other. How? Because when you are selling at POD, when you are buying at POD, you mean the trader buys at POD. When you buy from the supplier at port of discharge, so the supplier is selling at port of discharge. The supplier is taking care of the ocean freight, right? Because they are selling here, not here, or not here. If the seller is selling here, they have already done ocean freight. When they do ocean freight, they take care of the bill of lading. When they take care of the bill of lading, they have to know who the consignee is, consignee being the buyer in Vietnam. So you will literally give away this information to your seller without even knowing that, when you start out, you did not know that, but later down the line, it will be too late for you to correct your mistake, and your seller will know the buyer. in any case, right? So when we are talking about exports, this is exports, right? When we become an exporter, we have to either buy here, and sell here. And sell here, yeah, that's a possibility. We can sell here, but we should never ever sell here. So this is all about what I'm throwing you ideas. I'm giving you where to buy, where to sell. It all depends on Incoterms, and it all depends upon the documentation. An exporter is not somebody who just sells. For example, you might think, okay, trader, I'm a trader in Canada. There is a seller in Canada, and there is a buyer in Vietnam, and this trader sells to this buyer in Vietnam and becomes an exporter. No, because in this case, this trader sells to this buyer in India, but does not become an exporter. So this trader, in an export-import scenario, this trader, you guys, you are not an exporter or an importer here, because your buyer in India is an exporter now, because they are doing ocean freight. Now, how can they do that? Because they have a company registered in Canada. Let's say they do not have a company registered in Canada. All right, so let's go to scenario number 4. Trader is in Canada. You are buying from Germany. Let's say you are buying from Germany and you are selling to Pakistan. Port of loading is Birmingham, port of discharge is Karachi in Pakistan, right? And you are a trader, right? You bought from this supplier, you sold to this buyer, but you want to become an exporter here. All right, you don't want to buy here now. Now this is different than this scenario, because you can buy here and you can do local transportation here. Local transportation from Canada is easy, or local transportation in US is easy, but local transportation in Germany, maybe the trucking people, they do not even speak English, right? So if I were to explain you this, all right, so let's say there is a port of loading here, and there is a port of discharge here, and this thing is local transportation, and this thing is, let's say, ocean freight, and again, this thing is local transportation. You do not want to do this local transportation in a country where you've never been to, where you do not know how it works. And let's say this country is Germany, or this country is Mozambique or Tanzania, or this country is Vietnam or Thailand. You do not want to do local transportation here. You want your seller to do local transportation here, because when your seller does a local transportation, they deliver it up until here at the port of loading. Right? When you buy at port of loading, when you buy here at the port of loading, then you do ocean freight, and then you become an exporter. But this is Germany. How can you export from Germany? You do not even have a company here, right? It's not necessary to have a company in any country to export from that country. You can take the help of a third party, or you can take the help of freight forwarders, right? So remember I said the freight forwarder is your best friend. The freight forwarder is your best friend, meaning the freight forwarder will be able to file the export declaration from that country, from Germany. All right. So when they file the export declaration from Germany, on your behalf, on this trader's behalf, you go on the bill of lading as a shipper, as an exporter, and that's what you want. You do not want the name of the supplier on the bill of lading, because remember, this bill of lading is an important document for this buyer in Pakistan to import the cargo. So the buyer in Pakistan will need this bill of lading, and when they see the bill of lading, so let's say there's a bill of lading, all right, so this is the bill of lading, okay? Here, it's written MSC, this is the shipping line, right? And this is the bill of lading number here. It says, shipper, right, consignee information, and then notify party, right? And all these information is written here. And this bill of lading is required by this buyer. When the buyer sees this bill of lading, they will be able to see the shipper information. If the shipper is this supplier, you did it wrong, because then the buyer knows the supplier, and end of story for you. But if this shipper is you, then it is good for you. Then the buyer can see the shipper information as your information. Consignee will be this buyer information. Notify party, probably this buyer. This buyer will never know who this seller was. right? And with the help of a freight forwarder, there are like few things which how the way how the bill of lading has to be devised and the way you have to file the export declaration in the country. You will be able to do this, and then you become an exporter from a second country shipping to a third country, right? So second country, Germany in this case, not Canada, to a third country, not Canada, Pakistan, right? So let's go back. Let's clear all drawings, and we are going to a second scenario now, which is actually similar to this scenario. Okay. I'm not going to explain this scenario to you. This scenario will be extremely difficult for you to understand without the proper knowledge of Incoterms. You need to know Incoterms properly when you can understand the scenario. So I'm going to skip this, and I'm going to go directly to this scenario. So you are a trader, and you are buying from Brazil, and you are selling to somewhere in Canada. Most of the people, they think, oh, you know what, this is importing, simple. I'm a trader in Canada. My seller is in Brazil, India, China, Mozambique, Tanzania, Germany, UK, wherever in the whole world. It can be anywhere, right? And you're buying from outside of Canada, bringing the goods into Canada, you become an importer. That's what most people think. No, that's wrong. You can either be an importer here, or you can choose to be an exporter here, or you can be both. Now, first things, why do you want to be an exporter? Why importing is not good enough for us? It's simple, like we can buy from Brazil, we can sell it to somebody in Canada. Similarly, there will be, let me explain. So, all right, so there is a port of loading here. All right, so we call it port of loading. We call it port of discharge. This is ocean freight. Similarly, this is local transportation. This is also local transportation. And from here to here, local transportation, from here to here, do you want to do this? Do you want to do local transportation in Brazil? They speak Portuguese. You do not speak Portuguese. If you do, if you are from Brazil, if you are originally from Brazil, yeah, you can do that. But we don't want to do this local transportation. So in this case, the seller will sell us here. We will do this ocean trade. We will export it from here to here, and we sell here, right? We bought, we buy here, and we sell here. If we buy here and we sell here, we do not do importation, because that's port of discharge. That's in Canada. That's like maybe Port Longroom or Port Montreal or Port Halifax or Port Vancouver, wherever, but it is not inside of Canada. So if we sell here, it's similarly like how we were selling here. So we were selling here. We were selling here. If we sell here, then we become an exporter, right? It's the same thing here. So scenario number 6, port of loading, port of discharge. If we sell here, we only become an exporter. And how are we going to export from here? Same way, like how we did earlier from Germany, with the help of a freight forwarder, with the help of a third party. They will be filing export declaration on our behalf. We will be doing bill of lading. We will go on the bill of lading as a shipper. And this buyer is an importer, and they will import. Now, other way around, there's another way around. If you want to buy here instead of selling here, so I'm going to clear the drawing. So let's say instead of, let me draw. So instead of buying here, you are now buying here. So you are buying at port of discharge. You're buying at port of discharge. If you buy here and sell here, then you become an importer. So how would you do that? So you are buying here, somebody else is the exporter, maybe this party is an exporter, they exported it to the port of discharge, right? They did the ocean freight, they exported it to the port up until port of discharge. And now when the goods are at the port of discharge, you will work with the custom broker, you will pay the custom duties, import duties, taxes, and then get the local transportation done to the buyer's warehouse. And that way you become an importer. Now I'm putting it in very, very simple way, how actually it is done. Let me go back to a scenario like where I can explain it to you. Let's say this is a scenario, right? In order for you to do this, or for somebody to do this, trucking, you need a container booking. A container booking is issued by a freight forwarder. And to a freight forwarder, the container booking is issued by the steamship line. So all these parties are interconnected. So steamship line gives the container booking to the freight forwarder. The freight forwarder gives the container booking to the trader, in this case, this trader. And the trader gives the container booking to a trucking company. And the trucking company, like depending upon where, I will show you something. Hold on. So that is a container booking. If you can look at that, this is like carrier booking as a booking number. And the carrier here is the steamship line MSC. There are 5 dates: sail date, rail cutoff or port cutoff, AES, which is dock cutoff, AES because it is US, it is from Port Everglades, which is Florida, right? And then there is one more date, which is earliest receiving. Then there is earliest pickup. So total 5 days: 1, 2, 3, 4, and 5. Depending upon these 5 dates, this is your schedule, right? And it is written on this container booking. Where are you supposed to pick up the containers? Where are you supposed to return the containers? What is a port of loading? What is a port of discharge? CNTR here stands for container size. QTY is quantity. 40 feet high cube is a kind of a container. VSL is vessel. VOY is voyage or voyage, right? And that is your container booking. Similarly, like we have other documents, which this is a real document. This is a real document exported. 3 containers were exported by our company in, I don't know where the date is, but like probably this is around 2015. Okay, so 2014 that'll be, not 2015, I believe. Anyhow, so scenario number 1, scenario number 2. If you see, there are 6 scenarios in total, and these 6 scenarios are the scenarios of exporting, importing, shipping. There will be nothing out of these 6 scenarios. If you want to do export, import business, you master these 6 scenarios, and that's it. You don't need anything else, right? You will know what is what and how you want to move forward, right? Now, one more thing that I want to tell you is, which I haven't told you so far, is actually the Incoterms. When we are talking about Incoterms of buying and selling, the ICC tells the Incoterms that there is one seller, one buyer, one seller, one buyer, buyer, seller, right? But in reality, most of the trades, like more than 70% of the business export import, is done through a trader. So that way there will be 2 Incoterms to put. So how would that work? Like I told you earlier, so we will divide this whole scenario into 2 parts. And let me use my pen here. Freehand. And so in the first half, the trader becomes the buyer, right? And then the trader becomes the seller. So this seller buyer, deal number 1, seller buyer, deal number 2. In our business, in when we do this business export import, we sell first and buy later. So instead of saying buying and selling, we should start saying selling and buying. There's a reason why we do that. Sell first, buy later. So when we are selling, we decide this Incoterm first. How are we going to sell? So let's say we are selling here. So I will just quickly tell you this Incoterm is CFR, cost and freight. Earlier, it used to be C and F as per Incoterms 2000. This is 2010 and 2020. This is Incoterms 2000, right? This was also known as CNF. How? Because when people said CNF, 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 it became CNF. Now, CNF was an incorrect Incoterm. The problem now is that half of the world, not the half of the world, majority of the world use this Incoterm over C and F, or even after 2010 Incoterms were rolled out up until 2015, 2016, people were still using CNF. People are still, like in 2020 also, people are using CNF. When this is a wrong Incoterm. to write CNF is actually incorrect. And banks use this Incoterms. When we exported, I'm talking about pretty much, I think 2013, I believe, 2012 or 2013. A very big bank in a country, I don't want to name the bank, they asked us, unless and until you write CNF on the invoice, we won't be able to release the payment. So we had to write CNF. We had to literally write CNF, which is an incorrect Incoterm, on our invoice so that we could get the payment. And that's how the world runs. The world doesn't run by reading books. The world doesn't run, the business is not done by reading publications and like getting the definitions of terminology. Nobody is going to ask you the terminology. Nobody is going to ask you, okay, tell me the definition of bill of lading, unless and until you do so, I'm not going to sell anything to you. Never, ever it will happen, right? So let's erase this and let's go further. So far, I have told you about these 6 scenarios, and I've told you about Incoterms. So let's say there's, by the way, there's scenario number 3, which we have left. This is when you are working as a broker. As I said, like a broker is somebody, an entity who never buys, never sells, works as a commission agent. So when this trader, somebody else, not you, is exporting from country 1 to country 3, or like country 1 to country 2, wherever, like it could be, actually in reality, in scenario number 1, you can be a broker here, or you can be a broker here. In scenario number 2, you can be a broker here. Instead of a trader, you can be a broker here. When you are a broker, you have to file proper documentation. Proper documentation meaning you have to have cover, security cover, so that you get commission. And that security cover, we have a document called NCND. If you go online and search for NCND, I will write it here for you. It is called NCNDA or NCND, Non-Circumvention Non-Disclosure Agreement. 95% of the people use fake copies, incorrect versions of NCNDs. There's an article written by Kenjum, actually. It's on Kenjum's website as well. And if you just search NCND or like genuine NCND copy or something like that, you will, on Google, I think you will see Cangem Global's article on the first page, right? Probably in the first few results, right? And you should read that. You should definitely read that. That tells you what a genuine copy of an NCND is. The genuine copy of an NCND is sold by ICC. It is known as 769E as an echo. So publication number 769 echo is actually the genuine copy, right? So that is the understanding, that's a knowledge of documents that you need when you work as a broker. When working as a broker, you do not buy, you do not sell. There are a lot of other documents which we will soon see right now, and I will tell you what different kind of documents are there. We'll go to those documents very soon, right? So Incoterms, just very quickly, if I want to explain Incoterms to you, let me explain 2 or 3 Incoterms to you, right? Let's say you are buying from China. In this case, it is China, let's say, right? So, all right, draw freehand. So instead of Brazil, it is China. You bought something from China from eBay, and you are here. This is you, all right? This trader is somebody who sold to you, okay? And they supplied, not at POD, not at POL, of course, because then you will have to export from China, which when you do not know export import, normally people cannot do that. They supplied here. This trader sold, that's the sale, right? This trader sold the goods here. So this trader sells here. When the trader sells here, on your doorstep, at your doorstep, right in front of your door, and you just like open your door, pick up the package, you know what that Incoterm is? DDP. Without you even knowing that, you just bought DDP, delivery duty paid. Delivery to the doorstep, and the duties, all kinds of duties, import duties and taxes are paid. This is called DDP. And when somebody sells here, this is known as CFR, cost and freight. If somebody sells here, it could be FCA, it could be FOB, it could be FAS, depending upon different scenarios, right? Most people use it FOB, which is incorrect almost all the times. But as I said, business is not done by reading publications. Sometimes you have to use incorrect Incoterms. We will always put the right Incoterm in the bracket. We will explain the Incoterm as per 2020. Let's see if it flies, right? Now, if you sell here, that is called EXW. We never call it EXW, we call it X Works. It could be X Works, X Warehouse, X Factory, X Yard, X Farm. So we are buying X Works. If the trader is buying X Works, so the trader is buying here, then the trader will do local transportation, then the trader will do ocean freight, and then the trader will do, depends how they are selling. If the trader is selling DDP, then they have to do this local transportation as well. If the trader sells here, right, then that's it. They have to do local transportation and ocean freight. All right, now let's delete this, clear all drawings, and we are now here. All right, so the business setup. Now, most people, it's very important actually to understand. Most people call us because we work as an import-export consultant as well. We work as an international trade consultant as well. Most people call us and say, sir, we are looking to get the import-export license in Canada. There is no such thing as an import-export license in Canada. Literally, no such thing as import-export license in Canada or import-export permit in Canada. First of all, you need to understand who you are. Are you a company already? If you are not a company, you would not be able to get any kind of licenses, any kind of permits, nothing. You have to be a company first. To be a company, you can actually be a sole proprietorship. Sole proprietorship is not really a company. It's an extension of your name. It is just like you using a company name, you using a brand name. So it can be a sole proprietorship. This is the wrong way of doing business. The correct way of doing business is having a corporation, incorporating your business. When we say corporations, it could be when you see companies ending in CORP or INC or limited LTD or corporation, you know, those all are corporations. Then you can have a partnership as well. A partnership can also be a sole proprietorship or a corporation. Now, if you ask me what kind of corporation, there are different kinds of corporation. There is, you know, like federal corporations, there is provincial corporations, a lot of different LLCs are there, LLPs are there, limited liability corporation, limited liability partnership. So a lot of different versions are there, right? When you get the corporation or a sole proprietorship, you will have a business number. We call it a BN. If you are from any other country, for example, you are from China, you want to set up a company in Toronto, different regulations, different places, different regulations. For example, if you want to set up a company in BC, you can own 100% of the company. If you want to set up a company in Ontario, you can own 99% of the company. So as I said, different places, different regulations. Now, how to register the BN, how to register the corporation? There are many ways. You can go directly, you know, and register yourself with the government. You can use third parties. There are a lot of third parties. You can go to your accountant to do that. Going to an accountant will actually, obviously, will be most expensive. Once you have done your, once you have registered your corporation, once you have incorporated your corporations, then you have to call BIS, the Business Information Services. Again, there are various ways to do that. You can call them directly, you can do it online. So you have to register for RT account, RP account, RC account, RM, RZ. So maybe you need all of those, maybe you need just few of those. When you incorporate, you already have gotten an RC account, which is a corporate tax account. You most possibly will get an RT account automatically. If not, then you have to get it, which is your GST, HST account. RP is payroll account. When you pay somebody, when you pay yourself, or when you have hired employees, majority of the cases, you will not need to activate the RP account when you start the business. RM account is actually the import-export account. Without activating this import-export account, you will not be able to make any exports or imports under that business name, right? And that is the closest thing to import-export license when people call us and we need an import-export license. Why do you need an import-export license? Oh, we want to import food commodity, or we want to import avocados. Yes, you need that. You need RM account. But apart from that, you also need something that is known as SFC license, Safe Food for Canadian license. If you want to import masks, like for example, N95 masks, and N95 masks or the surgical masks are considered medical devices in Canada, so you need an MDEL for that, or MDL for that. So there are a lot of different licenses for different commodities. And if the commodity is controlled, meaning like somehow prohibited, somehow regulated. If it is regulated, you will need a secondary permit on top of your RM account. You will need a permit as well. As you can see, CERS is Canadian Export Reporting System. Earlier, it used to be CAED, Canadian Automated Export Declaration. When I'm talking about the export declaration, remember, like you have to tell the government what you are exporting. In any scenario, when you are exporting from Canada, there was CAED in place. Now they have converted the CAED. That CAED is being decommissioned as we speak right now. So it'll be decommissioned by, I believe, September 25th, 2020 is the date, right? And this date was actually June because of COVID-19. They postponed the date to September. And then they expect everyone to roll on to the CERS, the Canadian Export Reporting System. After that particular date, after September 2020, nobody will be able to use CAED anymore. For newcomers, right now, they have to apply for CERS. They cannot apply for CAED anymore. It's not there. You have to apply for CERS. CERS is like a platform. The CAED used to be a software-based platform where you have to download a software. CERS is a browser-based, it's an internet-based platform. You have to just use, just like type in your URL, and you will be able to use the system. It's a good thing. Again, there are some flaws in that. We have to go around those flaws. We have to understand what is CERS. If you let me show you the copy of B13. Let me show you some other documents here, and give me one quick minute, please. All right, so this was the booking, and this is the old copy of the CAED. CAED, the Canadian Automated Export Declaration software. That is what it looks like, and you have to file it with the help of the software. So if you just go down and down, that's how the software looks like. And it takes about roughly probably around 40 minutes or so for us to explain how to fill out this software, how to fill out this form, how to use the new version now, which is CERS. And what you see on the screen right now is the copy BL, the BL copy, the bill of lading that we were talking about. The bill of lading, as you can see, it looks very, very similar to the B13. It tells this consignee who the shipper is and who the notified party is, with the vessel, the container numbers, and all of that. And you can see the container numbers here. And this is pretty old. I believe this is, the date must be here. And this is actually when Cangem Global was Chada Traders, and we were doing used clothing long ago. We started in 2009. We started our company Chada Traders in 2009. And 2010 was our first shipment, and the first shipment that we ever made was to Mundra in India. That shipment was for used clothing. Used clothing is a commodity that goes to many countries for recycling. Most people do not understand this, but most of the cotton, most of the wool, most of the acrylic that people are wearing is actually recycled, and it is recycled, right? So let's go back. So that is your business setup. A lot of other things are there in your business setup. And then we come to documentation. So in your documentation, there will be a pro forma invoice. There will be a PSEC, which is like a pre-shipment inspection certificate. Normally, this is used for scrap metal. Then there is freight booking. It could be ocean freight. It could be air freight. It could be like a container booking, depending upon what the commodity is and how you are actually shipping. There is a weight ticket. Weight ticket is also a very important document. It tells you how much is the weight inside of the container. Which technically it tells you the cargo weight. Export declaration, I already told you about. Bill of lading is something that we discussed. Invoice, packing list. Packing list is something that's inside of the container. Normally we will just put the invoice as just like one final one, not like a detailed invoice. The packing list is actually detailed. Then there is certificate of origin, then there is certificate of inspection. This could be a certificate of fumigation, telex report, a lot of documentation out there. So like going forward, if you are doing bulk trade or you are working as a broker, there will be a non-circumvention, non-disclosure agreement, which I already told you. The original copy for this is 769 Echo. Letter of intent, soft corporate offer, full corporate offer, bank comfort letter, ICPO is irrevocable corporate purchase order, sale purchase agreement, letter of credit. Letter of credits are actually very important. And like I'm just telling you very, very quickly, letter of credits are different kinds. There is like a transferable LC, there's a non-transferable LC, there is an at-site LC, there is like 90% at-site LC. An LC could be like a documentary letter of credit, could be, a standby LC. Like a standby LC is a secondary form of payment. So LC is in general a payment method, right? When we are using international shipping, when we are in an export-import scenario, the buyer does not want to pay whole money to the seller upfront in case the money is like a huge amount. If in case it is close to $50,000 or more, then the buyers normally prefer LCs, right? One more thing that I want to tell you. We converted this scenario. Remember, this scenario is importing, and we will prefer exporting. We want to do exporting and not importing. Importing is easy, but we don't want to do importing. There's a reason for that. The reason is importers do not get advance payment. Exporters get advance payment. I will repeat, importers do not get advance payment. If you're working as an importer, let's say you want to supply something to Walmart or Canadian Tire or Home Depot or all of these companies, your payment terms will be net 90, meaning you will be paid 90 days after you have delivered the goods to them. So transit time, which is the time it takes for your shipment from port of loading to port of discharge, actually from the seller's warehouse to port of discharge, plus 90 days. So technically it could be 4 months, maybe 3.5 months to 4.5 months. So you don't want to wait 4 months for your payment. And in case you think that, okay, you can supply to some other company which will give you a payment right against delivery, you are still waiting, depending upon what is the transit time, depending where is the port of loading, port of discharge. It could be 45 days, it could be 52 days, and it could be 10 days, right? So you don't want to wait that long. When you work as an exporter, you get advance payment. Exporters get advance payment. Importers do not get advance payment in this industry. That's a norm of the industry. That is a norm. You don't go against the norm, right? Okay, so now, when you are working as an exporter, normal payment terms are 50% upfront and 50% against copy BL. Now you understand what copy BL is. Copy BL is a proof that you will get from here. Once you have made the shipment from here to here and on the vessel, the steamship line will give the copy BL to you, and that copy BL you can forward it to the buyer in Vietnam, and that's a proof of shipment. All right, so 50% upfront before the shipment and 50% against this document, copy BL. Now I'm using copy BL, I'm not saying BL, right? There is another reason for that. We use copy BL and not the OBL in this case, because if you send the copy BL to the buyer, they won't be able to release the shipment unless and until they have paid the money. Now, if this buyer in Vietnam pays the money to you, and then you give a second document, which is known as a telex release, like you give them the release of the shipment, and that way they can release the shipment. That way they can import the shipment. But if you give them the full BL, the OBL, the original BL, without even paying you, they can actually release the shipment. So that's the difference why we deal with copy BL and telex, and why we don't deal with OBL when the payment terms are wire transfers and not LCs. In LCs, we deal with LCs, letters of credits. We deal with the OBL, original bill of lading. People, I know it is going to be too much for you. I'm going as layman as possible to cover a lot of things in about 45 minutes or so. Normally what we do is we go with the very basics. We don't cover this much in the first day of our training. What we do is we cover the very basics, just the terminology and just these scenarios, and that's it. We go very basics, and we actually show you on camera how the trucking is done and how the shipping is done. We normally do not even discuss Incoterms on the first day. We do not discuss LCs or business setup or anything on the first day. We go very, very slow, right? As an introduction, I wanted to tell you how this business is done, what are the common things, what people think, and when they think, okay, you know what, who actually is an exporter? Now you have a fairly good idea who an exporter is, who an importer is, who a shipper is, what is the difference between shipper and exporter, what is the difference between consignee and importer, what is the difference between notified party and consignee, or notified party and importer, or what other terminology. Basically, these are the basic terms, these 10 plus 6 terms or 7 terms. These are basic terms. Without this, you won't be able to understand anything in export import. If we go on, like if I were to tell you all the terms, there will be probably hundreds of terms used in this business, which we gradually we switch from a layman to technical. So that's how I explain. So we switch from very, very layman to basics, and from basics to technical. That's how we do it, right? So now this is what we have covered, 6 scenarios. I've told you a little bit about Incoterms. I've told you about the business setup. And I've also told you about documentation. Let's talk about due diligence. All right, so you have all this information. Let's say you know about Incoterms, you know about the shipping, you know about exporting, importing, bills of ladings, and all the documentation. There are 22 different kind of documents that, let's say, you know about. How are you going to find buyers and sellers? What buyers and sellers you want to work with? And how are you going to do this due diligence? Due diligence is actually another word or another phrase for homework, another phrase for checking if everything seems right. What is the truth behind the deal? And if you're dealing with a broker chain or not, how to actually see if the documents are fake, how to actually do your homework, how to find buyers and sellers. We have a process for this. We call it like an in-house DD, in-house due diligence, which we actually do it. And very simply, it's like a 7 or 8 step DD process. If you do that process, you will be able to find out how old the company is, who the owners of the company are, whether the phone numbers given on their website are proper, whether they're saying, okay, we are doing this business is actually a reality or not, whether they are lying or they're telling the truth. You can actually tell everything just by doing that in-house DD. It will probably take you around 20 minutes of your time to actually follow that DD, and you will be able to tell if the buyers are genuine, if the buyers are fake, or do you want to go ahead with this deal, or you just don't want to go ahead with this deal, right? And then market analysis. When we talk about market analysis, let's see what most people think. Most people think, okay, let's say what I thought when I started my business. As I said, we started our business in 2009, and I was in Canada. I was from India, and I thought, okay, you know what? Let's see what India and Canada does together. That's what most people, majority of the people think. That is what 99.99% of the people think. Okay, I'm from this country, and I'm in Canada right now, or I'm a Canadian. I was born here, but I have been to this country, or they think about China then. Right? If they don't think about any other country, they think about China. All right, let's buy something from China because it's cheap there. Let's sell something into Canada. All right, market analysis. Market analysis, we will divide the products, the commodities, into two parts: feasible and non-feasible, viable, non-viable. Viable products are those, I'm talking about newcomers now. Viable products are those where you can actually, as a startup, as a newcomer, as a beginner, you can do those commodities. Now, coal, for example, iron ore, crude oil, gas oil, diesel. These are non-viable commodities for a startup. You should not go into these commodities. On the other hand, there are some commodities which are actually easy to use. Cars, for example, agriculture commodities. Canada is one of the largest exporters of special crops and agriculture commodities. 48% of all the lentils in the world were actually exported by Canada. I'm giving you figures for 2018. I don't have the correct figure for 2019 so far, but 2018, not 48% of lentil were exported by Canada. Canada is the largest exporter of buckwheat, the largest exporter of canary seed, second or third largest in sunflower seed and some other, like you talk about sunflower seed, chickpeas, pulses, lentil, canary seed, mustard seed, buckwheat, all these commodities, Canada is either number one, number two, or number three in, which is a good thing, which you can actually look into that. But as I said, it is not necessary, it is not mandatory that you have to start from Canada. The whole world is your playground. You can actually do whatever you want. You can actually do scenario number 4. So scenario number 4 was, again, this. You can supply from a second country to a third country. Being in Canada, you can do that, right? So other commodities which you should go into considering COVID-19 are, most of you people are thinking about N95 masks. Most of you people are thinking about sanitizers. No, that's an incorrect approach. Sanitizers, N95 masks, there are already too many people going that route. Most people do not understand that there are a lot of other items that the government of Canada or some other companies here would need. If you go on buyandsell.gc.ca, I will repeat, buyandsell.gc.ca. It's a government of Canada website, as you can imagine. So there are a lot of commodities which can be done, which actually the government needs and they want to buy from you, right? And what I'm telling you right now, is that you can actually think of some other commodities which are specific to COVID-19. And let's say there is a phase 2 or a wave 2 of COVID-19 happening somewhere in October, November. If you are in scrap metal business, you will be shut down. If you are in used car business, you probably will be shut down. But if you are in agriculture business, or if you are in like essential business, the term is essential business. If you are in that essential business, you will not be shut down. So I believe that it's a better idea right now to think about future. Think about 5 steps ahead of you, right? So that's probably a good idea, and that's the way you should be thinking right now. So for the market analysis, let's go to business marketing now very quickly. Business marketing is, as you can imagine, marketing your company, marketing your business. So the first thing in this is website is your resume. I see many funky looking, funny looking websites, and just by look of the website, we tell, oh, you know what, we don't want to deal with this company, because we judge. Everybody judges. So if you know what, like they say, if you go in an interview, you will need a proper resume, because without a resume, you won't have an interview. What you do in the interview is on you, but at least you need a resume to get into the interview. And similarly, to get into the business meeting, you will actually, or business phone call, you will need a website. In today's world, without the website, it's futile. It's actually a bad idea to start a business. And how a website should look like, right? Pizza is a good website. Rogers is a good website. Bell is a good website. Any other company that, like, you can imagine, there are good websites, but we are in a different kind of a business. So our website should be actually particular to our kind of business, right? So how you put your logo, what you put on your website, where you put your commodities, how you want to explain yourself, what you do, how will you tell other people what you do, how will you tell other people what kind of knowledge you have, right? And that is all very, very pertinent. That is very, very extremely important, right? B2B platforms, business-to-business platforms. You might have heard about Alibaba.com or TradeKey or Exporters India or all of these kind of websites. There are tons of them. All of these websites, sometimes useful, sometimes futile. They are all known as B2B, business-to-business platforms. In our business, we sometimes use them, we sometimes do not use them. The biggest mistake people make is go on a B2B site, go on Alibaba.com, try to find a seller, try to find a buyer. That's the biggest mistake. How you market your company, where you want to buy, where you want to sell is actually very important. For example, you want to buy used cars. Are you going to buy used cars on Alibaba.com? No, very simple. Everybody knows that. Everybody knows that you are going to buy used car from like a used car dealership or Kijiji or Auto Trader or Auto Catch, you know? And everybody knows that. So similarly, you should know where you should buy chickpeas and pulses and lentil and scrap metal, all the other commodities from. Right? And then we talk about the script, how to talk to sellers, buyers. Let me give you an example, very funny example. Let's say you go to Walmart. You go to Walmart and you ask them, sir or ma'am, like you go to the front desk and you ask them, ma'am, I want to buy 4 pounds of potatoes. How can I buy? How can I check the quality? Do you accept credit cards? Do you accept check? Or do you accept wire transfers? How can I buy from you? What is the price? The lady is going to think you are high on something, right? Because nobody does that. You don't do that. You know how to buy from a Walmart. You know how to buy from Canadian Tire. You want to buy from Home Depot. You already know how to do that. You should know how to buy from a scrap metal yard, how to buy from a farm, or can you even buy from a farm? In Canada, no, that's not possible. You want to buy chickpeas, you cannot buy from a farm. You want to buy pulses, lentil, you cannot buy from a farm. You have to buy from traders. You have to buy from other companies. All right, that's how it is set up here. Okay, now when you are calling the freight forwarders, for example, and you call the freight forwarder, you say, sir, we have a buyer in India. As soon as you say this, we have a buyer in India, or to your seller, to your freight forwarder, that's it. They don't have any interest in talking to you anymore. They don't care about your buyer. They care about you as a buyer. You are the client to them. Your buyer is your client. Your buyer is your responsibility. It's not their responsibility. So as soon as you say this, oh, I have a buyer in India, no, we are not interested. We get tons of phone calls every single day. And to tell you the truth, we have redundant voicemails, which we actually in the industry, we call them redundant voicemails, meaning if somebody's calling for JP54, if somebody's calling for scrap metal pricing, we transfer their phone call to a voicemail, which will never be answered. And this is the honest truth. Every company has that. Every company does that. That's why many people who have tried emailing, calling these companies, they don't return your calls, right? They don't return your emails. That is a reason, because you are using a wrong script. You are asking them pricing where you shouldn't be asking them pricing. You call a scrap metal yard, you call them, you say, sir, I'm looking to buy scrap metal. What is your price? Wrong statement. What kind of scrap metal? Ferrous or non-ferrous? Let's say it is non-ferrous. What kind of non-ferrous? Aluminum or copper? Or let's say it is aluminum. What kind of aluminum? Tane Tabor 6063, 6061 extrusions. There are tons of aluminum scrap metal, non-ferrous. And let's say now you call them and you say, sir, we are looking for any kind of aluminum scrap that you might have. We are interested in extrusions or 6063, 6061 also. We can buy auto cast as well. We were just wondering if you have some quantity for us and we want to work with you. And we understand that you might have a KYC in place and we are willing to go ahead with that. Let's see how we can work together. That's it. Don't ask for pricing. Don't ask for anything. Just see how you can work. Introduce yourself. Most of the times in some commodities, in scrap metal, the sellers do not tell the price. The buyers have to tell the price. In some other commodities, let's say chickpeas or pulses, lentil, then the buyers do not have to tell the price and the sellers tell the price. That's how it goes, and that's the script. That's what you need to know. You need to understand how to talk to sellers, how to talk to buyers, how to talk to freight forwarders, how to talk to brokers, right? If you know this, your job is half done. Job well started is half done, like they say, right? Let's go next. So then there is, at the end of it, at the end of this session, I want to tell you how you can successfully start this business, right? You have to have knowledge. The problem is in this business, the people who are doing this business are not teaching, and people who are teaching have never done this business. And that's the bottom line. That's the thing. You need to understand how this business is done practically. You need to understand how this business is done like in the real world, not how the ICC has devices, and not how the YouTube videos are made, or not how the articles are written and a lot of publications are written. I'm not saying that they are useless, they are not, but they won't tell you how to start your business. And you have to master yourself. You have to have proper knowledge. The bigger problem is not lack of knowledge. The bigger problem is not lack of information out there. It is incorrect information out there. The number of YouTube videos explaining Incoterms, it actually boils my blood. I go as a guest speaker to many places, and when I teach Incoterms, people who are past traders who are even doing some kind of business, and when they say, no, that's not FOB, no, that's not FCA, I do not have an answer for them. I don't know how to explain the thing because their cup is half full. It's easy for me to fill a cup which is empty. It's not easy for anybody to fill a cup that's already full, right? So at the end of it, what I want to tell you is just do your research, do your proper research. I'm not saying YouTube videos are like here and there. You should probably work for a company that is doing export. That's what I thought. You know what? I will work for a company that is doing exports, imports. But that did not pan out. I learned my lessons the hard way. You can learn your lessons the easy way. Now we, Cangem Global, run a training program, which is, as you might already know, the only program in North America which is run by not a training institute. We are not a training institute. We are a commodity trading and brokering and international trade consulting company, right? In other words, export-import company, export, import, and shipping company. So you can learn from the people who are doing this business. All right. If you have any questions whatsoever, you can also go to our website, cangemglobal.com/training, which is actually mentioned on all the pages here. All right. You can click and you won't be able to click in the video, but you can just write in your browsers and you will be able to see all the details. We have a detailed curriculum. If you have any other questions, you can actually email us and we will reply back. So that's it for today, guys. I wish you all the very best in your ventures. If you're interested in export, import, shipping business, it's a very lucrative, very good business. You're on the right track. Tons of commodities you can do, tons of, you can even work as a service provider with all this information. You can work as a shipper, you can work as a, you can go in the shipping industry, you can go in the commodities industry. The world is the limit, right? So with that, I wish you all the best. Thank you so very much, and signing off. Thank you. Bye.